recap. We do have about 15 minutes left in today's session. However, I am going to bring to your attention right now some interesting movements that are setting up, in particular on GLD. It is something that I haven't spoken about publicly, at least on this YouTube sort of domain here. For a little bit, I have in the past spoken about the trade setup. I think it really solidifies itself and it cements itself after the price action we saw today in response to the Fed raising interest rates another 25 basis points, up to 1.75 to 2% now. That's essentially the cash rate, the short-term cash rate that the Fed has now hiked rates to. Now, on that news, a lot of people were expecting GLD to potentially sell off. However, in the past, we have, of course, referenced this bullish trend line that has been in effect. And even as at the close on Wednesday, or very close to the close on Wednesday, this was potentially some market news that may have potentially pushed gold below this trend line. However, if you pay attention to today's price action, the intraday movements, you can see for yourself, if I zoom on in to the GLD chart here, we are up 38 cents again with about 15 minutes left in today's session. And this is essentially a very bullish candlestick. What you are seeing once again is out of that pronounced long lower wick, this is the third consecutive high-low on GLD after what appears to be some form of an exhaustion gap back into this rising bullish trend line. Now, I know that we haven't broken above 123.87, but this is generally, or at least it should be interpreted relatively negatively, so to speak, for GLD. We do see, of course, the Fed wanting to raise interest rates another 2 times in this calendar year, and this is largely already priced into the current market price of commodities. So all things considered, GLD is holding up quite well. We are starting to see potentially a reversal underway and the continuation of this bullish upward trend that has been in effect since late 2015, early 2016, through to the current juncture here in June 2018. And I think it's something worthy of your attention. If you're not in GLD already, I know a lot of people who've priced themselves in down here around 122.40. Some got in too prematurely up here at 124.85. Overall, however, GLD, or at least the technical chart, is still relatively bullish. This is, or at least in the past, I've identified this level, this red horizontal line, as being very important support resistance on the weekly chart. Also, this green rectangular box has given us just a general vicinity of where we would expect GLD to sell off back on into before it continues out of its bullish advance. And that's essentially really what is setting up right now. If we bring up the Bollinger Bands as well, you can see a full-on Bollinger Band squeeze under construction. This is very, very nice as well. Generally, these types of movements, or at least these technical setups, resolve themselves in the continuation of the larger bullish movement, or at least the trend direction. And as I have already quoted numerous times, that is to the upside. So I think there is potentially some major movements on the horizon for not only GLD, but also SLV. Above all else right now, I'm very happy to see the reaction of market participants, active market participants, are actually bidding gold at the moment. So this is quite interesting to see. We're going to have to pay very close attention to this moving forward. But what we can say definitively is that this support is not only holding, but it is continuing to build. And we are continually setting up a series of high lows in a very molecular time frame, but it is working in conjunction with larger fractals of the underlying bullish trend on GLD. So I really wanted to give you that update just there. I also want to show you SLV as well. If I can bring up the right chart, you can see SLV is starting to take out. What you should be paying attention to right now is this Bollinger Band, which has been taking place, or at least setting up on the weekly chart for a number of years. Pay attention to this. I haven't seen a Bollinger Band squeeze this tight on the weekly chart for silver in a number of years, and it looks as though we are starting to break out. Now, generally, you don't trade Bollinger Band breakouts on the weekly time frame, but it is also working in conjunction with that of what appears to be that of a larger sort of symmetrical triangle, which has been in formation since 2016. Again, if you pay attention to this, towards the very early stages of 2016, much or very similar to that of GLD as well, we have been holding this support area and the support trend line. And as you can see, not only are we supporting it, or at least bouncing off from support, but we're breaking above that declining resistance area that has been an area for sellers, or at least bears, to sell in the past. So it looks as though commodities are potentially waking up. I know the chart of SLV is looking a little bit more enticing than GLD at the moment, but if I had a preference of the two, I personally would choose GLD. That is because I'm an options trader, and it is more worthwhile, so to speak, with the dollar incremental movements in the price of GLD being valued at about 124, 125 compared to that of SLV at the moment. So I just wanted to share that with you. I'm not in SLV. However, I am in GLD, and that is long to the upside, and I'm pretty comfortable as at the close, or very close to the close on Wednesday. Also, what I want to do is update you on TWX. Today, this stock went absolutely berserk. This is after, of course, the news of the AT&T merger or the takeover bid. And you can see here on TWX, this is the ticker symbol in the top left-hand corner. We are up about $1.87. We had a target on this. Interestingly enough, at 97.60, well, we overshot that. And if you pay attention to the O was the open of Wednesday's session. You can see we opened more or less at $100 per share. This was going to be our secondary target. Okay, our first target was 97.60. However, generally stocks gravitate around those psychological round numbers, those big, large psychological round number increments. And as you can see, 99.96 was the official open. We did push up above that. You can see the high next to it, 107 cents. It did pull on back down. But even if you had your target, so to speak, at 97.60, you would have got stopped out of this for an extra $2.40, so to speak, as at the immediate open on Wednesday. And this is playing off from our original breakout over here at $94.58. So that's about $5.60 total in the space of, more or less just under a month on TWX. So you get these surprises from time to time, and it's always very welcomed, and you should be very grateful when these types of events set up in your direction. So a little bit of a bonus there on TWX. Outside of that, as we draw towards the close on Wednesday, the markets are under a little bit of short-term stress. We are starting to see a little bit of selling materialize in the Dow Jones Industrial Average. We are down 100 points at the moment. I know my screen says 48 points at the moment. That is delayed streaming data, but I'll try and do an update for you right now. We are pulling back on down into what appears to be the rising exponential moving averages. Pay attention to this as we continue to move forward. This old resistance that we've been waiting to break out above, say for instance on the Dow Jones Industrial Average at 25,027 points, should act as new support moving forward, and you're going to see something like this materialize moving forward as well. As my screen just adjusts right there, let me zoom in and put it back into perspective for you. This old resistance should act as support as we continue to push on up back into these open windows. Pay attention to this. This is the market magnet, which is continuously pulling. I know sometimes it sort of loses its strength, so to speak. However, we are firmly in an upward bullish move. I know people are also calling for potentially resistance of this rising bullish channel. We've spoken about this in the past. Most recently was during this phase over here. And the big warning was not to sell the market, but to actually add to positions when we came on back down into this green rectangular box. What you can envision right now is this green rectangular box being moved more or less back up to that 25,000 handle on the Dow Jones Industrial Average. The same is true for the S&P 500. This old resistance area should act as new support. I'm not calling, or it doesn't necessarily mean we have to come all the way back down. That's not what I'm saying whatsoever. But as long as we remain above this level here, the markets are still in an intermediate and also macro bullish advance. And nothing is changing until, of course, we begin breaking below this sort of intermediate bullish trend line that has established itself and where we began positioning ourselves off from in the month of March, April, and then adding again as we entered into the month of May. So a little bit of short-term stress, so to speak, and that is obviously reactionary to what the Fed has done, even though that has largely been priced into the markets. The Nasdaq, however, putting a little bit of a whipsaw in above 7736. You might just have to persist with this a little bit. Take confidence, of course, in the fact that this market is breaking to new all-time highs, that we are very strongly above also the rising 10 exponential moving average, which shows you, of course, strength in this market. If I bring up the ADX and the CCI, look at these two. As we're breaking to new all-time highs, we want to confirm this with, of course, the ADX and the commodity channel index. These are still relatively bullish as well. No major warning signals other than, if I can zoom on in the detail into the daily level, we have seen that of an engulfing candlestick. This is taking us back to Thursday last week, and today you can sort of call this that of a little bit of a shooting star candlestick. It isn't the nicest of shooting star candlesticks. It barely, I mean, you really have to get a little bit creative in the analysis to really label this that of a shooting star candle, but at least you can see that there is some short-term selling pressure on up and around these resistance peaks. Now, if I continue this into the Russell 2000, see for yourself, a little bit of an inside day candlestick as well. We've spoken about this in the past. I still think that the Russell is going to charge up to about 1730. That's my target on the Russell trade. And again, this is going back to the back test of the bullish trend line that's led into the breaking of that in 2007, and then of course the resulting bear market. So I think that this is a really good target on the Russell 2000. It's going to work as sort of a thermostat or a gauge, so to speak, of, well, where are the other equity markets sitting when the Russell hits this? Not to mention, of course, what does the Dow and the S&P 500 do once we get on up and close those open windows? So I just wanted to throw that analysis in there as well. But as at the close on Wednesday, or very close to it, you should be thinking about GLD And the sort of the price action that has been not only just underway today, but also over the past number of weeks as that support continues to hold. Now, outside of this list, very quickly, I just want to update you on HD. A lot of these stocks, by the way, you can just bring up your stops and just lock in the profit. So you can just put your stop more or less below the low of Tuesday's candlestick if you wanted to be relatively aggressive, or you could just take market positions now and just sell at market more or less, or at limit if you want to put in a specific price. But again, very profitable trades. It's your decision where you want to place your stops, but I always encourage, hey, if we are going into a little bit of market sort of volatility or potentially that of a pullback, why not take some of those profits off the table? HD is one of those companies. I've already referenced TWX that you should be out of as at Wednesday. We've got FDX as well. Surprise, surprise, it's starting to pull on back down. We do have an engulfing candle. So this trade in and of itself, it was limited. That's because we do have an earnings call coming up. So you should be thinking about liquidating this, or at least by Friday this week. We do have an early reversal signal right now. And generally after these types of moves, again, you retest support. So I don't think there's all that much you're going to be able to scrape out of FDX moving forward. And it's a good opportunity anyway, just to say, look, I'm going to put some cash in my back pocket and be done with that individual trade. The other stock, however, was JD. JD went absolutely nuts yesterday. It was up close to 5%. And we've had consecutive days on this stock over the past number of weeks. One here, another one here, another one here, 3 plus, not to mention, again, just daily movements or at least gaps to the upside. If you wanted to protect your sort of trade on this, you can always place a stop again below the low of today's intraday movements. It does, of course, increase sort of the probability of being stopped out, but at the same time, it's, when I say stopped out, of course, that's just banking that sort of unbanked profit at the moment, or at least that open profit, so to speak, reflecting that open trade at the moment. So JD is looking pretty good, although we do have that of a high wave sort of spinning top as at today's candlestick construction. If I very quickly go through our top 12 list, you can see a lot of these tech companies, or at least stocks in general, are pulling back. This might be the retest that we've been waiting for, but it is also potentially another really good entry point once we start seeing reactionary movements off from these rising exponential moving averages. Now, I will say in full disclosure, it's not ready yet. So although we are sort of interacting with the rising 10 on Apple, it's not a buy signal just because we're hitting the 10. We don't have any reversal signals to suggest that the movement is going to continue to the upside yet. I do believe it is going to show up. However, it's just not here yet. You can see the same thing. Well, not so much the same thing, but Amazon coming back up to its resistance swing high over here, very close to 1719. This was after the breakout entry at 1640. I'm a little bit tentative right now on Amazon, just with what the market's doing, of course, and sort of reacting to the little earlier sort of fundamental shift, the backdrop of the market with the Fed rate obviously raising or hiking points, another 25 basis points. So we'll see how this sort of works its way through the system, whether or not we're going to see anything of a larger pullback. But again, you have to be sort of hedging your bets right now and thinking about, well, where am I going to potentially look to be re-entering into these positions, as opposed to, well, are we going to see immediate breakouts? And that's what I'll be speaking about this Saturday coming forward. It's going to be a buy the dip sort of opportunity moving forward. Now, Boeing Airlines, again, pulling back. This was a very quick trade, 361 up to 369. You can see it pulling back here. We do have that of an engulfing type of candle, or very close to a one black crow. This is the retest of the pivot, also coming back into those rising exponential moving averages. Not concerned about that. It is normal to normal ebbs and flows of the market and that individual stock in conjunction with the market. So I'm liking this. It is still healthy overall. We are still holding above those exponential moving averages. Baidu is just drifting, really. It's continuing to push to the upside, up another $2.65. Caterpillar, again, very similar, holding above the exponential moving averages, largely getting stuck. However, it looks as though we are setting up a series of higher lows. I can see, of course, the argument for a channel consolidation, and yes, we would technically be at resistance. However, the backdrop of the markets is still up, and we are still looking at the Dow moving up to close those open windows. So I think Caterpillar is going to be drift on, or at least continue to drift on up. It might be a little bit of an uneasy drift, but overall, we should see prices continue to rise over the coming weeks. On Caterpillar, we've got COP. I spoke about actually legging out of this yesterday. If you hadn't already done so, we were in within, I think, 6 points or 6 pennies of our target here at 71.05. Again, a little bit of a pullback today, at least intra-session. I'm assuming that you would have potentially legged out of this as per the market update yesterday, below the low of Tuesday's candlestick. And even if you're not, I mean, you still have a white candlestick here, which is quite good. We are up 17 cents. However, that lower wick could potentially have legged you out of that trade. Again, profit above 66.97. So I'm going to assume that more or less COP is closed out, and we will be talking about that as a new trade opportunity as we progress forward. CVX more or less moving sideways. Personally, I'm not in this, but at the same time, it's still looking quite good. May rally up to 129.95. We'll have to see what the market does, but all things considered, that's doing relatively well. We've got Google still holding up above 1131. I still think that this is a back test of what appears to be that of a declining resistance area. You can see on my screen, we've got the high, the lower high, and then of course the third at the moment consecutive lower high. A lot of people will say this is a trend reversal. However, in the past, we've been essentially rallying on up to close the open window. So you see that movement right there. And then of course, here's the most recent gap, which was our target at 1131 after entering at 1050 and 1055. Well, what happened? We rallied on back up. And now what appears to be happening is that we've broken above the declining trend line and we're retesting it and potentially setting up the bounce to continue. So there are a couple of tech companies holding up relatively well, or have been holding up relatively well. You can see here, Netflix is one of them. It's caught my interest during the session today. You can see above 370, 307. I really wasn't expecting this, but you can see just how powerful this is when it gets moving. 342 was the original entry. Look at the volume spike today. This is not the closing volume. As I said, we still have about 10-15 minutes in today's session, but you can see my target up here, $399 per share. We're trading at 381.44. So potentially got triggered into this as at Wednesday. If you did, you're sitting here with a big smile on your face. If you didn't get triggered in today and you were already triggered in at 342, you've probably got a bigger smile on your face as well on Netflix. So looking really good on that. Now what you can do is just place your stop below the low, the intraday low of today's session, which will price you in at about 360. Quite a decent little breakout there on Netflix. And again, that's just another sign, another sort of continuing signal that the market itself is relatively healthy, with another stock continuing not only to break above its highs, but continue its trend as well up to that next psychological round number of $400 per share. No surprise, IBM, not really all that interested in it at the moment. I think a great trade is developing, but we might see that last push down here, and you can begin to see the narrative really, or at least the alignment of not only the markets, but also individual stocks and potentially commodities, setting up these very short-term higher lows mixed with sort of reversal gaps and divergences forming, where we could see prices really rise exponentially over the coming weeks as well. So excited about IBM, however, not immediately excited as we move into Thursday's session, but overall it is a relatively healthy chart there. And to conclude with, we have Tesla. Tesla's just an inside day candlestick after what has been a parabolic rise off from this 280 handle. I'm not in this. I wasn't really all that interested at 312. I wish I was in retrospect, but hey, you can't be in everything. I had my reasons as to why I didn't like Tesla, or personally wasn't willing to sort of put any capital into a short-term option trade on Tesla. But as you can see, we've rallied. The problem is that we're rallying back up to past resistance, and we are still below and making a consecutive series of lower highs. So even with the intraday spike on Tuesday, we are still below the highs, or at least the relative highs that were priced in earlier in the year 2018, or at least the calendar year 2018 as well. So I think a lot of people are jumping into this, and they could potentially get burned. That burn is going to happen more or less from where we are now at 350, and that could be potentially the continuation of what appears to be that of a relatively bearish backdrop for that of Tesla, not only for the year 2018, but also a year before 2017 as well. So that's going to do us as at this Wednesday. If you have any questions, email me, success@pivotpoint-trading.com. I wish you a very nice Wednesday evening, everybody. I'll be back with you later in the week for some more market addresses, but again, I think you should be focusing on GLD at this particular time. Okay, I'm going to say farewell. It's James saying farewell on behalf of Pivot Point Trading. All the best, everyone. I'll see you again soon. Farewell.